Hello, my name's Liz Rowlinson of Place in the Sun, and I'm here with Kevin Monger of A Place in the Sun Mortgages. Good morning, Kevin.
Good morning, Liz.
We're here to talk about everything you need to know about getting a mortgage in Spain. Um, Hopefully answer the few typical questions in our most popular market. It's going to be a busy year again, I think. So we're going to try and cover off what we can in 25 minutes or so. So, Kevin, first up, tell us a bit about A Place in the Sun Mortgages and the backstory.
So, A Place in the Sun Mortgages is obviously the mortgage arm of A Place in the Sun, the well-known property program that we all see on the television. The mortgage department is actually part of another company, but it's trading as A Place in the Sun Mortgages, and it's been in operation for I think more than 10 years now. We have a team of around 25 qualified mortgage brokers. They're spread around the country. We do have a couple of advisors based out of the UK, but most of the team are here on the ground in Spain. We speak a variety of languages. But obviously the people viewing this program on this webinar mostly will be British speakers, I assume. So we have a lot of native English speakers in the team. And yeah, we've been in operation for a number of years now, the company itself. Since 2006. I'm one of the founders of the company. So I would call ourselves, probably the leading broker in Spain in terms of our experience and the number of team members that we have.
Brilliant, thank you. So, as I was saying, Spain, very popular market. I think the average spend for people on Place in the Sun website looking in Spain is £167,000 in the last year. So some people will get a mortgage. I speak to quite a few people doing so. And Spain has got a well-established market for mortgages, hasn't it, compared with some countries? So, Kevin, how easy is it for a foreigner to get a mortgage in Spain?
I would say it's straightforward, to be honest with you. As you mentioned, in other countries, it's a lot more difficult. Spain is very welcoming to foreigners in general, and also property buyers, people that want to buy property here in Spain. I would say that it's easier, generally speaking, not always, but generally easier for somebody that's employed to secure a mortgage in Spain, rather than self-employed. Some of the Spanish banks here, they're not as well. Clearly, they're not as familiar with a UK self-employed client as somebody working in a bank in the UK would be. And don't forget that here in Spain, because it is such a welcoming environment, not just to British property buyers, but also people from around the world. So we have clients from all over the globe, and each country will have its own, peculiarities in terms of the way that people are taxed, and how things work for self-employed people and employed people. So I think because Spain is very open, that it is, generally speaking, quite straightforward.
Okay, great. I mean, I speak to some people who get a small mortgage, they might tell me. I mean, not everyone needs to get a mortgage, but they decide to. But why might they do that?
Speaking to our clients, one of the main reasons that people would want to get a mortgage, even if they don't need to have a mortgage, they could be a cash buyer. It would be in order to invest the cash elsewhere. So, for example, I mean, just a typical example, the S&P 500 nowadays, it's quite easy. If you're in the UK, you can invest in the American stock market, which has been going great guns. 20% return in 2024 and also similar return in 2023. Interest rates round about 3 to 3.25% on average here in Spain. So why would you want to put all of your cash into a property in Spain, where in fact you could actually invest that money and get a greater return if you were to invest it in other assets? I've used the American stock market as an example, but it could be the UK stock market. You could put it into mutual funds, any number of different things that an investment advisor would be able to guide you on. So that's one of the main reasons. Another reason also, when we explain to clients that unlike in the UK, equity release here in Spain is nigh on impossible once you've taken out your mortgage. So that puts off some people. They think, well, actually, I've got this cash at the moment, but what about in the future? If I come into some difficulties or I've got a one-off expense, I need a lump sum and I haven't got that lump sum, but I've got a property over in Spain. I want to look at potentially releasing the capital from there, and then they find out it's not possible. That happens a lot. We get a lot of customers that come to us and say, oh, I've got a property, it's unencumbered, I didn't take a mortgage out when I bought it X number of years ago, I'd now like to do an equity release, please. And we have to say, I'm really sorry, it's almost impossible, especially if you want to take out the funds and have them back in your own home country. It's difficult anyway, even if you're not going to use them for that purpose and take them out of the country. So they're the two main reasons, really.
Brilliant. Now, you've already answered my question about what the rates are. You said sort of 3.25?
Fixed rates. So using a typical kind of fixed rate over 20 years as an example, somewhere between 3.25% is the average. But then it can be higher if you've got a lower price property, or in fact, if you've got a complicated profile, a more kind of exotic type profile, or whatever it would be, some reason why the bank would see your mortgage as being a higher risk, or that they're not going to make as much profit out of your mortgage as they would be from a higher level mortgage or a higher amount of mortgage. In terms of the variable rates, you've probably got somewhere between Euribor, which is the reference rate we use in Spain, and it's usually the annual Euribor that the banks are using. So it would be Euribor plus the differential. The differential at the moment is somewhere between, I would say, 0.5% and 2%. There's quite a variation depending on the risk profile of the customer and the type of property and so on.
Those rates are pretty good, especially when you're alluding to America, and I think the interest rates there are sort of 7-8% at the moment, for example. And so where do you see the direction of travel this year with rates? Do you see them going down a bit in Spain further?
Yes. So, coming out of the back of the pandemic, we had rampant inflation. There were the war in Ukraine and other factors contributing to rising inflation. Significant inflation during that period. Then in 2023, we started to see that coming down, and at the same time, interest rates were coming down. Last year, the European Central Bank reduced the deposit rate 4 times. There is another meeting of the European Central Bank later this month. Christina Lagarde has said, she's the president of the ECB, she has said that she'd like to see neutrality on the deposit rate. And she estimates that that's somewhere between 1.75 and 2.5%. As at today, it's 3%. So I believe that we will see that deposit rate coming down. And I think we'll end up somewhere around 2%. There are comments that I've been reading in the financial press that say that, certain commentators believe that the interest rate reductions will actually be more aggressive. So we could end up even being lower than 2%, somewhere around 1.75 or even lower. What might happen, which would potentially not have that happening, and maybe it would be more aggressive, is if growth, if for example, the European Central Bank is basing its kind of rate projections on a certain level of growth. But as we know, we've now got a new president of the United States. There's also different things happening in European countries. You've got some political problems in a lot of the countries, the main countries, France, Germany now. So who knows what growth we'll see. If we were seeing stagnant growth, for example, I think you'd see more aggressive cuts. Mm-hmm. So that's talking about the ECB deposit rate. Then you've got to consider what happens with the Euribor. So the Euribor is not the deposit rate. They're not completely in alignment. So the Euribor today is currently around 2.55%, I think. And also, will the Spanish retail banks pass on these reductions? Because the rates that we're talking about are what it costs banks to borrow funds between themselves, between other banks, the interbank borrowing rate. So when that goes down, it doesn't necessarily follow that the retail banks are going to pass on those reduced rates to the customers. I think we're going to see the European Central Bank deposit rate coming down to around 2%. I think that the banks will be passing on more so than they have done in the last calendar year, 2024. I think they're going to start to pass these rates reductions down onto the customers on the high street, the borrowers. I don't know exactly where we'll end up, but I think we might be looking at an average fixed interest rate over a 20-year term, for example, coming down to hopefully somewhere between 2.25 and 2.5%.
Brilliant. That's slightly better than the UK at the moment. So what about, is there a maximum amount people can borrow?
Yes. So it's a percentage of the purchase price or the bank valuation if it's lower than the purchase price. Not all banks offer 70%. The majority do, but some banks would prefer to have a maximum borrowing percentage of 60%.
Okay, and what about terms and age? I mean, a lot of people we both know buy in Spain aged about 50 or even towards 60. Is there an age limit?
A couple of the banks we work with, which are two of the largest banks in Spain, will now go up to age 80. If you are an older applicant, then they're going to ask to see your proof of pension income for obvious reasons.
Hmm.
Some of the banks have an upper age limit of 70 and some 75. So when we get customers coming to us and they're slightly older in terms of the average sort of borrowing age, we will look at which banks are going to allow them to borrow up to a higher age. In some cases, some of those clients might not want to do that. So we look at the whole kind of perspective. You know, how long does the client want to borrow for? What age are they at now? What's their pension income? And then we'll do an assessment and give them different options.
Is there an average term that your customers tend to borrow for?
Yeah, typically speaking, banks prefer to lend over 20 years, which is why I've been quoting the 20-year fixed rate. Most of our clients want to borrow a fixed rate, obviously for security purposes. I'd say probably 90% of our clients opt for a fixed rate. So 20 years is the kind of standard amount that banks here are comfortable with. There are a couple of banks that we work with that go up to to a 25-year term. And there's in fact one bank which will go to a 30-year term. So we can cover 20, 25 and 30-year terms.
Okay, thanks. What about setup costs?
The setup costs are much lower than they were prior to 2018. The government at the time forced banks to pay most of the setup costs. So there is a tax on the mortgage, varies between around 1.2 and 1.5%. The bank nowadays has to pay that tax. The fees for the borrowers are bank fee, that can range from 0 to 1% of the borrowing amount. Broker fees, unlike in the UK, where many brokerages or brokers don't charge the borrower any fee for the advice. Here in Spain, the norm is that yes, they do. That can vary from brokerage to brokerage. Our fees, we do continual studying of the market to make sure that we're competitive. Just to give you an example, on a typical mortgage, we would charge €695 to start the process once we provided quotes, provided that the client or the potential borrower wants to work with our company, €695. Then we charge a second fee once we get the initial approval. There's a minimum amount on that, which depends on the client profile. So I would say to speak to the advisor, but the typical amount is 0.6% of the borrowing amount. Okay. Then in terms of other costs, setup costs for a borrower, the valuation fee. So there were a couple of banks up until recently that were not passing this cost on to the borrower. However, the Bank of Spain has just ruled, I might need to redo that one, Bank of Pain, I called it. Right, so I'll just quickly start from the beginning. Okay, so in terms of the setup costs for the mortgages in Spain, you will have to pay, generally speaking, a bank fee on the mortgage amount. That can range from 0 up to 1%. Typically speaking, a lot of the banks are charging 0.5% on that. There are broker fees in Spain. Unlike in the UK, brokers here in Spain do charge fees to the borrower. The typical amounts for our company are €695 to start the process. Once we've sent you minimum 3 quotes, usually. We send the quotes to you, we can explain what the costs are, and then if you do want to proceed with formal applications, we charge the €695 at that point, which comes with a money-back guarantee. Then we charge a second fee of 0.6% of the mortgage amount once we get the initial approval. Our fees are, we know that we're doing an evaluation of our competitors on a consistent basis, and we know that our fees are very competitive. Then there is the valuation fee. So the bank will do a valuation of the property. There were a couple of banks up until recently that were not charging the clients, but now all banks, according to the rules of the Bank of Spain, are passing that cost on to the customer. We are able to find valuation companies that will do a relatively low cost compared to others. So speak to our advisors about that when you get to that point in the process.
Early repayment fees, how do they work in Spain?
Okay, so for a typical 20-year mortgage term, a fixed rate, In the first 10 years, it will be up to 2%. And then after that, it would be, so after the 10th year, it would be 1.5%, whether it's partial or total early cancellation. In terms of the variable rate mortgages, it would be a choice. If you want to have the penalty applying in the first 5 years, any partial or full repayment during those 5 years would be 0.15%, or you can choose to have it applying only in the first 3 years, in which case, instead of 0.15%, it would be 0.25%.
Thank you. What about timings? Some people like to be organised, come to our exhibitions, get all their professionals ready, lined up for when they go out on a viewing trip. Should they have discussions with you then to get an idea of how much they can borrow?
Absolutely. So we always recommend that clients contact us right at the beginning of the process. So before they come out on viewing trips, but when they're starting to think, we've got some money, we want to invest that in a property in Spain, that's the time when they should be speaking to us. So they would have, typically speaking, a phone call interview, or it can be information shared by them completing our online form. So we get the information and we can give them a really good guide as to what is possible. They may not even qualify for a mortgage. So it's better to know that before you plan, flights and using the time of real estate agents. If they're going to qualify for a mortgage, we can tell them, roughly speaking, what we think that will be, what the conditions will be. And at least then they're fully informed. They can look at, whether the mortgage is going to be possible, how it's going to compare to borrowing the money potentially in the UK. So we definitely say always at the beginning of the process.
And then basically, if they're out on a trip and they put in an offer, and I mean, how long does the process to apply for a mortgage work?
So I always base this on when we receive the full documents. So we will request all the documents we need in order to do the formal mortgage application process. Once we've got all that documentation, and we can send that off to the banks, that's when the clock starts ticking. I would say, typically speaking, for an average type profile, you need to allow around 2 weeks to get the initial approval from the lenders.
Okay. What sort of documents would they require?
The documents are kind of typical, I think. Even if you're applying for a mortgage in the UK, you'd need these documents. There are a couple of differences. So they're going to ask for proof of income. Obviously, before they're going to ask for ID, proof of address. So the proof of income, the proof of your debts, the proof that you have the cash in order to carry through with the purchase. And that's pretty much it. So the main difference, I would say, is that if you go to a UK lender and you're a UK national in the UK, they would request the credit report automatically. They can do that. They have the power to do that with just you asking them to do it. Here in Spain, there's no cross-border credit reference checking. So a Spanish bank would require that you actually apply online to Experian or Equifax to get your own, download your own credit report, and then you would need to then send that to us in order for us to then send that on to the bank.
Do Spanish banks kind of consider affordability in a different way to the UK banks typically?
Yeah, in the UK, the banks have typically, historically used income multiples. Here in Spain, they use what they call a debt to income ratio. So they will assess what your net monthly income is, either as an individual or as a household, or the applicants for the mortgage, mum and dad, or there might sometimes be more than 2 applicants. So they will look at the net monthly income for the applicants, multiply it by what they call the debt to income ratio, which is essentially a percentage. It ranges somewhere between 30 and 40%. So 30 or 40% of your net monthly income is what they would allow for your total debt repayments. So what they would do with that resulting figure is then deduct your monthly net commitments you currently have. So for example, you might have your mortgage in the UK, you might have a car loan, credit card payments. They'll do an assessment, and the resulting figure will be a monthly amount, which would be the maximum amount they will permit you to have as your new Spanish mortgage on a monthly amount.
Okay. That's just spurred another little question from me. Do they have special sort of dedicated buy-to-let mortgages in Spain, or is that not a thing?
No, there are no traditional kind of what we refer to as a buy-to-let mortgage. So a buy-to-let mortgage is where a bank will look at the rental income you'll get from a property. They don't do the typical assessment that you'd be having for a typical kind of mortgage. So buy to let is where you might have a portfolio of properties. They look at the portfolio, they will look at the rent you're going to get, and then they'll make an assessment. So in the UK, for example, I think up until recently, if your rent was going to be 125% of the monthly mortgage amount, normally they would approve the mortgage, irrespective of what income you have from your employment or self-employment. Also in the UK, a typical buy-to-let mortgage might be interest only. Interest only doesn't actually exist here. So the buy-to-let mortgage kind of offering that exists with UK lenders does not exist here, period.
Okay. What about are there any sort of pitfalls to be aware of taking a mortgage in Spain?
I would say one of the main ones, not necessarily to do with mortgages per se, but to do with the buying process, the legalities and valuations. So the legalities can lead into, the valuation. So the bank will not lend on any property that is not 100% legal. Sometimes, Spain being Spain, there's lots of grey areas and different reasons why a property might appear to be totally bona fide, has what appear to be all the correct licenses in place, and then you delve deeper into the kind of property information, and you might find that actually it's not 100% legal, and that will then obviously cause you problems. The bank won't lend. Sometimes we have huge delays where borrowers need to wait for a seller to do different things with a property, register different parts of the property, or get certain documents that they don't already have. That can lead to huge delays. And sometimes the sellers, when they're faced with this, simply say, no, I'm going to look for a cash buyer. I don't want somebody that needs a mortgage now because I'm not willing to put in the time, effort, and the expense in order to get the property 100% legal. That's the main one, I would say.
Yeah, I was going to say there in terms of what type of properties are problematical. You've just mentioned often sort of maybe rural properties that have had sort of illegal extensions and slightly legal issues surrounding them. What about if you're buying off plan?
If you're buying off plan, a bank will only lend you money in the period while the property's being built if you own it. So this is something we come across quite often. So for example, you might have a developer who are selling off-plan units, and the developer is not willing to have the purchaser owning any part of the property until they've paid 100% of the cost. The bank look at that and they say, well, if the borrower that we're going to give the money to in the form of the mortgage doesn't own the property, then we're not protected. We're lending money to a borrower, but there's no guarantee. So they won't do that. So what we have nowadays, there are some rules in place whereby borrowers are protected, because in the financial crisis, a lot of developers went bust and borrowers were completely left, having put their money down on deposits, and then they own nothing. The developers have gone bust, and they had no kind of protection at all. So there are measures in place to protect borrowers nowadays. Also, developers themselves have realized actually, many more people nowadays do want financing. So we will arrange the structure of the payments so that the borrower only ever has to pay up to, say, maximum 40 or 50% of the costs prior to becoming the owner. So the day that they get the keys in their hand and they go and the property is theirs. So the banks, obviously, they will go up to 70%, as we mentioned earlier in the conversation. So you might have a situation where a borrower would actually pay to the developer 50% of the cost. However, they can borrow 70% from the bank. So you can have a situation where when they go to the notary, the bank will actually be paying some of the money. Ordinarily, for a normal purchase, the bank is paying all of the funds of the mortgage to the seller. However, in this scenario that we're discussing, you can have a situation where the buyer has actually paid 50% to the promoter, the developer, and then they're going to receive some money back, 20% in this example, from the bank. So that's where a developer historically might have said, no, you need to go up to 70%, and that's got to come all from your own cash, or we're not going to sell the property to you. They've obviously realised over the years that they're missing out on a segment of the market that maybe doesn't want to put down the 70% or doesn't have the 70% in their own cash, or 100% in this case. So they've changed their rules, and they've made it more kind of easier for somebody to buy an off-plan property.
Thank you. And you've just reminded me of, you mentioned valuation a couple, 2 or 3 questions ago. Banks do a valuation of the property as part of the process?
Absolutely, they do. It's not like a survey. So a lot of the lenders in the UK will do a proper survey. They'll look at the structure, subsidence, all these kind of things that UK people will be more familiar with. Here in Spain, the purpose of the valuation, the tasación, is purely for the bank to understand whether the borrower is paying, a fair price for the property.
Right.
So the valuer will go to the property and they'll look at the square meters. They'll do a typical kind of plans of the property, look at the quality of the fixtures and fittings, but they don't have as much bearing on the end value as they might do in the UK, or they do in the UK. So they'll then do comparables. So they'll look at properties, similar type properties in the same area, and then you'll get an average square meter price, and then they'll apply the averages to the property. So where you get kind of anomalies, things that affect borrowers adversely, are somebody that might be buying a property which has been renovated in recent years, very high level fixtures and fittings. That value that is in that property on the actual market doesn't often get reflected in the bank valuation. So you do need to be careful.
Okay. And actually, another question that's just come to mind. I recently interviewed someone who was from our TV show, actually, who trying to get a mortgage in Spain, but they'd got a mortgage on their UK property they were trying to sell, and the Spanish bank wouldn't lend if they'd had a existing mortgage in the UK. Is that a typical scenario?
It all depends on the debt to income ratio.
Right.
So if we have somebody that is saying, right, okay, we're selling up in the UK, we're going to be moving to Spain, there's a number of different things there that we need to look at. So will their income continue? If it will, that's obviously, that's a lot easier to get a borrowing from the bank. If their income's going to stop, then it's virtually impossible. So we would always say to those clients that you need to be a bit careful about the way you do this. Who knows? We say to the client, look, are you definitely going to sell the property or not? Do you need the funds from the sale of that property in order to buy the property in Spain? What we won't do, and we won't encourage anybody to do, is lie to the bank for obvious reasons. So if the borrowers, the potential borrowers, do have a mortgage in the UK, however, when we do the debt to income calculation, it's fine. So they can have that mortgage, continue with that mortgage, and have the new mortgage in Spain, and it's still within that ratio, the maximum percentage permitted by the bank. That's fine. If it's not, and for example, they're going to sell the property in the UK, but they're moving over and they're going to have some kind of income when they arrive, we base the calculations on that new income. Obviously, they're going to need to evidence, how much the property is going to be sold. They would have to show the bank the sale of the property after that's happened, and then they'd have the cash. Obviously, it can work. What we can't have, as I said, is that we would have to, in a position where we need to be dishonest with the bank. So we just need to assess the calculations, essentially, is the answer to that.
Okay, interesting. And would I be better off borrowing against my UK property, assuming one can do that, than getting a mortgage in Spain?
Not according to the conditions, in my view. If we're looking average interest rates in Spain, somewhere between 3 and 3.25% or 3.5% at the moment, probably between 4 and 5 in the UK. So from an interest rate perspective, and bear in mind, we're talking about a fixed rate mortgage for 20 years where you don't need to keep going back to your lender to review it every few years, every 3, 5 years, or whatever it might be in the UK. Here in Spain, you have your mortgage, and from day one, fixed interest rate, you don't have to worry about it. So and ordinarily that's going to become cheaper in real terms as time goes on, because people's incomes increase. So it is, in my view, a better option, the Spanish mortgage. Why might somebody still not want to borrow in Spain? It could be that they've got a complex profile. For example, you might have somebody that's got a buy-to-let portfolio. Typically speaking, it's harder to borrow from a Spanish bank for that type of profile than it would be in the UK. So that might be a reason why we would say to a UK borrower, you know what, looking at your profile, I think you should speak to your UK bank first. We can, by all means, we can look at it with a Spanish bank, but it's not going to be as easy. That could be a situation. Or they might have a more complex profile for other reasons. Self-employed person taking a lot of their income in dividends. Not all the banks in Spain are keen on that type of profile. So as always, my advice is if you have any doubts and you're thinking, do I borrow in Spain or should I take out the equity in my UK property, speak to one of our advisors and we can guide you.
Thank you. And yeah, how do people speak to your advisors? Do they just give you a shout? They can contact you through our website as well?
Yes, exactly. So go to the A Place in the Sun website, find the page that relates to mortgages, and then you'll find there's an online form there and other ways in which you can contact us.
Thank you. Well, it sounds very positive with potentially rates of 2% this year. Well, I'll hold you to that, and we'll talk more about this, and anybody can come and meet you at our exhibitions this year.
Absolutely. We're always in attendance at the exhibitions. So yeah, we'll be there. And
yeah, they should come and pick your brain. So thank you. I've learnt loads. So I hope everyone else has. Thank you, Kevin.
Great. Thanks a lot, Liz.
Bye-bye.